Hello guys, it's Dale here with a new video, new swing trading analysis. Today I'll be working with NinjaTrader 8 platform instead of the TradingView platform which I've been using recently. And the reason that I'm showing you on the NinjaTrader 8 platform is that this platform is a bit more precise. I personally prefer it more to TradingView platform. It's way more programming friendly when you want to code your own indicators. It has no limits like the TradingView platform has. So that's why I'm showing you this platform today and not the TradingView. So let's talk about the trading idea. As I was saying at the beginning, I'm going to be talking about swing trading idea, which means that this is a long-term trading, and for that I'm using daily charts. And the chart which you see before you is Swiss franc, Japanese yen. In this video, I want to talk about this strong support, which is at 145.60. And this support is based on a volume profile setup, which I trade when there's a trend. So when there's a strong trend, like for example this one, then I use my flexible volume profile indicator to look into that trend, to see the volume distribution within the trend. And what I look for is significant volume zones, like this one or this one. Those volume zones are telling me where strong institutional traders were active, and within this uptrend, those strong institutional buyers were adding to their long positions in here and in here. By which I mean they were adding huge amounts of longs to their trading positions. And why I'm saying that those are longs is because there's an uptrend. Alright, now this is a setup which I call the trend setup. And what you do is you trade pullbacks to those heavy volume zones. Now, maybe you're asking why I drew the volume profile only in this zone, only in this part of the uptrend. The reason is that I wanted to talk first about this support, which got already tested in here. Right, this was support which I mentioned in my members area, and when I was publishing it, the chart looked like this. This heavy volume zone hasn't been tested yet. Then there was a pullback back to that level, back to that heavy volume zone. This was the pullback, and then there was the reaction. So that's why I didn't show you the volume profile like this, because it would be a bit distorted, and at the time of publishing that level in my members area, we actually only saw this part of the chart. Alright, but in this video I wanted to show you how to trade that trend setup. So you look for a significant volume cluster within the trend, wait for the price until it makes it away from the level, then makes a pullback, and then at first touch you trade from there. So this level is tested, this long at 150.22, but the same logic applies to the level at 145.60. This one, as you can see, hasn't been tested yet. There still hasn't been a pullback to this level. So when there's a pullback to this level in the future, then I'll expect a reaction, because I'll expect that the buyers from here, those strong institutional buyers, will want to defend this zone and push the price upwards from there again. Alright, because this zone was very important for them in the past, and I expect that it will be important for them also in the future. The logic is the same as in here. Alright, pullback and long. Now there's also one more thing that I like about this level, and the thing is that if you look at the yearly volume profile in here, it shows the volume distribution throughout the whole year. Then the yearly point of control is right here. This is yearly point of control, which means that throughout this whole year, the heaviest volumes were traded here. And as you can see, this is where we have that long level, right? So it's a nice combo of two trading setups where not only the trend setup is pointing us to this level, but also the yearly point of control. Now, because this is a swing trading idea, we need to set stop loss and take profit accordingly to that. We need to let the trade breathe. So what I recommend is placing stop loss behind heavy volume zone. That's like a rule number one when placing stop loss orders. So you want to place a stop loss behind heavy volume zone. And also what I like is to place a stop loss behind those kind of swing points. So what I would recommend is placing the stop loss in here, which as you can see is roughly 134 pips. And regarding the take profit, you want to place it so your risk reward ratio is at least 1. So the take profit should be at least somewhere in here. But I'm having better results when placing take profit around risk reward ratio 1.5 or risk reward ratio 2. So this would be like the minimal take profit. All right. So that's about that. That's about my take on the Swiss franc, Japanese yen, and the long-term support here. And before I wrap this video up, just a quick note about an ending sale on my website. If you go to trader-dale.com and go to trading course and tools, then scroll down a bit and there is this order flow pack webinar sale. It is a sale which I offered to everybody who attended a webinar which I had last week. And what the sale is about is that you can get the order flow pack 52% discounted and get it only for $397. It includes my custom-made order flow software, order flow trading video course, and my custom-made volume profile indicators. There's a video which you can watch. It will show you everything that's included in the order flow pack. So check it out, see for yourself. The special webinar sale will be ending tomorrow. So if you want the order flow pack, make sure not to miss the ending of the sale. Alright, so that's about that. Thanks for watching the video. I hope you liked it, and I'll be looking forward to seeing you next time, and until then, happy trading.